Well, happy Sunday, everyone. It is Shooter Scott Henderson. We are going to go over swing trade notes. Of course, at the end of our presentation, please do review our disclosures. Talk about a confusing week. My gosh. I don't know that next week is going to be any better. We had that escalation this weekend in Lebanon, where we attacked Hamas targets. And yesterday, I think it was Hamas or Houthis or Hoodoos, I don't remember. They blew up a tanker, which was worse than the Exxon Valdez spill because of the size of the tanker. So we're up a little bit on oil. I really have, I was so engulfed in charts, related to setups that I didn't really get a chance to do a review on that because it happened after I looked Friday. So stay tuned. If I see some important stuff between now and tomorrow morning, I might put something together, send it out. Sort of ended up flat. I was wrong on PDD, didn't have enough positions on. I mean, we ended up basically breaking even for the week, as I call it. So, basically I want $5 or more in premium for the week, in total. Didn't get there. So it's what it is. Now we have, I want to talk about Square for a second. It's a hedge. Excuse me, not Square. SQQ. And forgive me, I'm missing a Q on my chart, but I'm not going to correct that. I'm tired. I'm done. So we went out to October $10 calls. They're running about $32.50 right now. A contract right now. I have an equivalent of about 0.25% of all of my exposure on right now. As market deteriorates, I'm going to build on that, which is why I went to the October $10 calls. They were cheap enough. Even if I pay $1.50 for them, I'm good, because if the market's deteriorating, it'll work. So that's the thought with that. Now, I hesitated Friday to take Merck off because it really didn't go anywhere, but it hasn't gone south either. And the reason is that it potentially is on the list from being cut from the S&P in October. So between now and then, we're definitely not holding that as a position trade. Now, Intel, I think, is a longer term position trade. I closed the 23 strikes last week, basically for break even, because of market weakness and potential volatility. Didn't want to hold those, but we did hold the January $30 calls. I want to build a position there. I think it does have some decent upside. It's basically already taken its bath. As long as it holds its own like it did last week during any kind of drawdown, I'm good. I see no reason to cut and run. Let's see if we can push this thing up to $35-40 with $30 strikes over the next 2 or 3 months. It sounds good to me. Now, I want to add to TLT, but I'm not there yet. Right now, I've got my risk exposure that I want there. I mean, we're not in bad shape based on where we are. We're well in the money. Now, this week, I really want to see how durable goods. I think that's important Monday, because we start seeing broader weakness besides what we've already seen. That could cause us to, really risk off a little bit more. However, they bought the dip again. Okay, what insanity here? I've not, this period of time, I've not seen this in my, really 7 years being aggressively tracking Elliott Wave, but in my 9 years doing what I do, I don't recall this. And as a matter of fact, my coaches don't recall it either in their 30 and 40-year history. So big thing this week is going to be Nvidia. I think we beat. I don't see how we can't beat. India started buying AI. I don't know how many other countries. South Korea have started buying AI. Mexico's probably buying AI. So, the initial FOMO that we got from the prior price pushes were probably from those acquisitions. Now the rest of the world is buying AI. So I don't see how it doesn't beat. Yet, I don't like the risk going into it because I can't justify it based on my thesis or my theme or any of my setups that I'm looking at. So I'm probably just going to add a few contracts going into the last minute. Unless it really starts running, we get that volume. 130 strike is real heavy. I like the 140 strike maybe. For those that like to play the game, we got Atlanta Fed later on Wednesday. I don't think consumer confidence moves on Tuesday. And San Francisco Fred, I don't know. He's got an interview at 2 p.m. Yeah. Might move the market, but I don't think so. Thursday, we got jobless claims and advanced trade balances and GDP. Second revision. I think I said this over in my earlier video on primary waves. We need a second revision on data. God, I don't even need a second revision. So pending home sales, I think, are the big Thursday. PC on Friday, I think, is going to be the most important. And if they revise consumer sentiment down, I don't see much risk to the downside. Now, everything I really like is on Wednesday after the bell. Okay. However, I didn't post it here, but I also like Scotiabank had a nice setup. I went with the risk reward. Therefore, if I'm right once and I lose twice on the setups I put in this week's article, I should be good because the higher risk reward. But I have a number of names in there. You'll note that I posted some additional, where did I put them? Oh, it's actually below this, sorry. I posted them here, the 50% back plays. These are the ones that I really like. I really like all of them, actually. Caesar is still there, still running. I shouldn't have closed that, but it's still not too late to grab a piece of that. So, take a look at that. Targets are still there. You want me to update a chart in chat, just ask. Quite a number of continuation plays, really like ADSK and RTX. Especially with what's going on in the Middle East. I think that just has some upside. Okay, so back to the rest of it. Nordstrom's, I think it's going to be a big tell. Nordstrom does well. Kohl's probably does well. Chewy is a mixed bag for me, but I like it. And Abercrombie and Fitch is another one that I think will do well. So if Nordstrom does well, you might throw a couple of contracts because right now that's the top selling retail store for, I guess, personal items is the best way to describe it. Also, Foot Locker there. So, that could be a big tell. So that I think that's a big thing. Now, Trip. I like Trip. Had a nice setup. It's up to you on your risk reward here. I'm just going to be flat. I don't like being long here. Right now, market conditions. Too much chance we come off. If we do get a pump Monday, we probably get a dump Tuesday. But Trips at after the bell. So if we open decent, we hold the opening range, and we just flat grind, Trip probably will report positively. And I don't know that I want to chase it. I think I sort of want to wait till after earnings to decide if I'm going to put something on there. But we had a longer term setup, and I'll be absolutely, totally ticked off if the sucker runs before I get a piece on it. That seems to be the case. Workday, we won't discuss that. I don't like going into earnings, and my bias is that earnings are always a lottery. So holding into earnings, you have to understand that. And to be very candid, spreads or cash secured puts always are a better play. But we have NVIDIA, CrowdStrike, Salesforce, and Affirm. If all of those hit Wednesday, we're up 3 points by the end of the week. That's just real simple. All those beat, gorgeous numbers, offer buyback, right? Offer a stock split, increase dividends, whatever it might be. Okay. Now back to the bank issue, because I like the Scotiabank. There's another Canadian bank here somewhere. Where was it? Lasted. After I got a minor concussion, my vision's been blurry and it's not clearing up. And my screen is like 36 inches away from me and everything's freaking blurry. Got to go back to the optometrist again this week. Been back twice now. So, all right. So RBC is one that I believe I liked. Now, why? I couldn't get my arm around it. I liked it for earnings just because of the history. But the charts stunk. So I don't like stinky charts here with a potential risk. I actually like V, but the chart stunk. Then, I'll go through the rest of the stuff that I like. Further on, Lulu and Ulta also are going to be important. So this is retail week, as I call it. Marvel is another one I might jump onto. There's just, it really depends on how we go this week. If we start building again and the FOMO comes off the sidelines and starts building here, then I'm probably going to jump on board and add a few positions. All right, so let's look at Autodesk. It's a continuation play. All right, so let's talk about the chart a little bit. I added a little more detail on these charts. Now first, I have a model, a thesis, or a theme of things I want. Okay, one, I prefer a confirmed low and a divergent low. Circle indicates I got that. +1. Write down a list as your conditions to enter a 50% back continuation breakout play, whatever I have. If I put a circle down there in RSI, that condition's met as far as I'm concerned. Right? Sometimes good. That's actually a pretty good one, extended over a period of time. Couldn't fill the gap. Then we did a final kind of place and push, and it worked. So now stop is where I want it to stay. I don't want it to get below this 249.58. I want to stay above that. Reason, it's waning. Now, the way the volume is, we don't have nice volume. I'd like to have this volume. See this volume right here? This is what really interests me about this chart. This right here. That is freaking solid. Yeah. And I don't remember why I'm not in it or wasn't in it for this gap. Can't tell you. Maybe I just didn't see it or I don't know. Can't tell you. All right, but what happens? This looks pretty euphoric. Not quite like this. Not the same. This is building. This is more. They're liking it. Now we got a breakout line overhead. What is breakout? Usually extends the 78.6 at least. So We got 264.11. Then our next high is 260 right here, right up here. So 268.90. So I like the September 260 calls. You can add above. This gets up here. We can end up here like Fortnite. Just pop above this and put a new high in up here around 300. So I wouldn't even hesitate. We get up here into earnings Friday after the close. So we got the whole week on this puppy to build, right? This actually is my favorite chart for that and RSI, etc. Also, how well it likes to pop. It likes to do these gap runs on little things, right? So there would be nothing that would prohibit this to get up to about 282 easy, you know? So if we have 260 calls, those are going to pay really well. I mean, really well. So the key thing here is manage your position sizes. And I've been talking about this for weeks, you know, reduce position size as we get, you know, come down a notch, come down 5%. Okay. We get a little higher in the indices, drop it another 5%. You keep reducing your position size into this rally. And I can't show it here, but the commercials, the COT reports on all these commodities, the indices all indicate they are not buying into this rally. They are selling into this rally. So my suggestion is, or I suggest you add, it's your boat, your ship, you're your own captain, okay? I'd like to add above 256, that confirmed, which is right there. I mean, we're basically right there, 256.05. So, I mean, we're 75 cents away from it. All right, CRM, continuation play. Love this look. Right at the top of the gap, testing the breakout line number 3. Either we fail and we're going back down to this 70 or 23 cents. Stop on a close below 257.27 on a daily chart. It closes below there Monday. Close it into the close. If you think it's going to close below there into the close, close. Now, in hindsight, I don't like. I think this year I like stops worse than I ever have in any year because quite often they take the stop out and they like to keep going. Well, still have to have risk management in what you do, and that's the only way I know how to do it. Very candid. Besides mitigating position size and scaling in and scaling out. Something happens that's risk adverse, trim some. You get the feeling that you should trim some, sell some. That's it, simple. So add above 272.87, which is basically going into this next gap, for the gap. Even though the gap is sort of tighter than that, that's where you push it. Now realize we're right at the 50%. I prefer chasing the 50, but this was such a sweet look. 1, 2, 3. Fact is it going to hold 4? It's going to break through. Hold 5, going to break through. Yeah, I think we got enough time selling September 280 calls. Or buying September 280 calls. Earnings are Wednesday after the close. So decide if you're going to hold some through earnings. I haven't made that decision. All right. 5 below 50% back candidate. Let's talk about this chart a little bit. First thing, we do not have divergence in the RSI. It put in a lower low and a lower low, well, lower low in price and lower low in RSI. We can't confirm because this is our divergent low. That's our confirm, right? So there's a very good possibility we could put in another low down here around 20 bucks. So I don't want to give this too much room. Close below 76.45, I'm going to be out, period. Add at 87.50. So I'm probably going to start off with a quarter position on this one just because we're early. Realize 50% back is up at $1.42. I mean, really, we're at 82 bucks. I love pretty things. I love it when it looks like this, and I have reasons to buy it. This volume is a reason to buy it. Right? That's reason to buy it. Those are what they came. Now notice this push here. Notice that we had more of a sell here than we had here. But notice the volume, how light it is compared to here. They came after. They really did. And honestly, I didn't spend as much time on the options as I should. Maybe somebody can look between now and Monday's open and post where there are basically look September, October, November monthlies. If there are a lot of volume on them, I mean, it met the criteria when I looked at option strat, but I didn't look at the confined number of strikes across the board. Figured I could do that later because I was running out of time. Add again above 117.98. So our target right now, swing target. This trade, September $85 calls, is to swing to 109. I'll take halfway there if I get any kind of reason where it's not going to go. Because this either is going to go, because that's a pretty euphoric push. I mean, realize we're looking at 2 weeks. 2 weeks, it's basically moved $5 a week, right? And we're not even back to the other. Notice the ranges. Very similar to this, but this is much more aggressive. Look at this, pushes. Look at these pushes. Look at how aggressive we got. Look at this. This is the most similar look. Oh, we got a little more bearish look down here. We don't have that down here. So this could push from here to all-time highs. We have a reason. And to be candid with you, I don't even know what these guys do. The chart sure looks pretty right here, especially with a higher low coming in right here. So that's my thought. The only thing I don't like, again, is no divergence on this put, okay? but we do have a little divergence on this. Right here, that candle was our low in RSI. Then we put one more low. So we have some divergence on it. So this supported the uptrend, but then that broke down. 1, 2, 3. What is this? This could be an extended overshoot, which basically doesn't do anything to the upside. We still got a primary wave 3 count way up here, 300 from 82 bucks. If this is the end of this base channel, this is going to be a position trade by the end of the next quarter. That's just my thought. I like the way that sucker looks. All right, hims and hers, man, all over chat. Just things did. I mean, just 50% back setup. Now, I'd like more room here. I only measured the B. I didn't measure the whole leg. So reality is we could go up to the 78, it's about 22 bucks if we take that whole leg into consideration for the upside. Notice for trend support. Higher low came in here. Just, it's a beautiful thing. We have divergence here on this low. Right here was the lower low, right? Then we got another one right below there. So we have a little divergence, just not a lot though. Could be a little cleaner, maybe like this. That was really clean. Glaring, as my coach used to say. Thanks, Dale, by the way. Taught me some of the most important things I know. All right, so earnings is unannounced. I always wonder, what does that? They're going to come out and surprise us? That's my thought here. So at above, we get back up into this for that breakdown, 1808. Outside of that, we got this 1, possibly 2. There's a little more room here. So, I mean, we're not too far down. Maybe put a position on, see what we get. I don't know that I'm going to be at a full position going into that 1808. I want to see if we back test because it's still red candles. They're not blue. They're not green candles. So not really exciting. And the volume is still red. So I mean, we can come down here and back test this range and then go. So you want to be conscious of that. So maybe a little less positions. Now that being said, the disclaimer is whenever I say that, I'm freaking wrong. Oh gosh, that bugs the living daylights out of me when I set something up and then I put a bias on it and it goes the other way. I actually say that in some circumstance and don't repeat it again, thinking that somebody or a little green man standing on my shoulder is listening to me and he's going to say, oh, he said that. I'm going to go ahead and go the opposite direction. Oh, I'm going to sell instead of buy. Oh, yeah. All right. So I believe that's what I have for the week, folks. Great trading. Until next time.